Hi, and welcome to our first Bank It or Tank It of 2020. I'm Chad Shoup, and I'm excited to hit the ground running this week with a brand new stock that I picked because right now there's a lot of events going on since 2020. We saw the Dow jump on the first day, then it dropped sharply the next day due to some event going on in Iran. So today's stock is actually a stock that's going to let me expand more on those things that have been going on, and it's Chevron, an oil and gas giant. It's going to be our first Bank It or Tank It stock of 2020. And I picked Chevron because it's going to let me expand on what's going on in Iran a little bit deeper. We're going to look at what that means for the rest of the stock market, but most importantly, what it means for oil prices, because Chevron's an oil and gas company, and the key factor for its share price going forward is going to be how oil prices trade. So if they go up, that's going to be great for Chevron, and if they're expected to go down, that's going to be bearish. When you look at all of their press releases and earnings statements that Chevron has, they're all mention how oil prices are doing. If they're up, that's great. That's helping support results, supporting higher revenues. And if they're lower, that's hurting revenues. So we're going to talk about oil prices first when we look at Chevron, and then we're going to dive into the rest of our Bank It or Tank It situation. We're going to look at the fundamentals, the sentiment, and the technicals for Chevron to figure out whether or not this is a stock that you want to bank on in 2020 or if it's going to tank and head lower. But before we jump into all that, I just want to give you a chance to scroll right below this video and click subscribe. It doesn't take you out of the video. It just takes 2 seconds, but that way you don't miss out on any of my Bank It or Tank It videos that I post each week, plus any other market videos that I post to my channel. You'll be able to check those out as well. And after this video, be sure to check out my YouTube channel because I have other Bank It or Tank It videos on there as well. I just did one on the S&P 500 where I gave my price target for 2020. We've also looked at Under Armour, Cisco, Roku. So check those out, plus multiple other stock market videos that you can get my analysis on from my YouTube channel. So just scroll below this video when I'm done and check out all the additional content that's on my YouTube channel and that we have available to you on our website. Now let's jump into today's Bank It or Tank It with Chevron, but we're going to start by looking at oil prices and how the developments over in Iran are going to impact oil prices going into 2020. And of course, I'm going to start with a chart because I'm a technicals kind of guy. So we're going to look at a chart of oil prices real quick. Now, this is not the technical segment for today. We're still going to break down Chevron stock later in the video, but I just want to give you a sense of what oil prices are doing and have done due to the developments in Iran. So when we look at oil prices, they spiked on the Iran news that there was a strike over there and people are worried about the tensions going to explode between the US and Iran and how this is going to impact oil prices. They clearly expect them to go higher, but you can see that it closed just below the strong red resistance line on the charts. That's going to be a key thing to track going forward. We want to see oil prices break out above this if they're going to continue to go higher, because oil is trading in this wedge pattern at the moment. We have a rising support line and a declining resistance line. So as these two converge, there's going to be a breakout and we're going to see oil prices flush either lower or surge higher. And when you look at some of the analysis that have been out in the market already based on the Iran news, people expect oil to hit $80 a barrel in no time. This could be just based on no real news coming out after this, just oil prices reacting to the new tensions between Iran and the US. Oil could surge to $80 a barrel just like that. And I expect that to be the case that we'll see play out over the next few weeks. Even if oil doesn't break above this red resistance line this week, even if it falls to test the support line one more time, I expect oil prices to break out higher and then continue higher over the next several months in 2020. And I'm going to show you a seasonal chart in just a second to help explain why that's exactly what I expect to see take place. But there's also other analysis out there from credible analysts that if Iran retaliates, and they do this by cutting off the choke point of the strait over there that over a third of oil a day flows through, and there's more escalation in this process, which I don't believe will happen. But they said if it does, oil could hit $150 a barrel in no time. When you look at oil prices, going back to as far as this chart can go, 2000s, oil has never hit $150 a barrel. So we're talking about a monumental move in oil prices if this situation escalates and if Iran chooses to close the strait. But I don't see that playing out this time. I don't think that's the case. Because when you look at the situation in Iran and what President Trump is trying to do, whether or not you believe with the airstrike or not, or how they're handling it, let's get beyond that and let's just talk about the implications that it means going forward. I don't think Iran's going to retaliate in the same sense that it's going to escalate into a war. I don't think Iran wants a war right now. They're not ready for it. And the U.S., unless other people step in to help Iran, U.S. is in a great position to do that. But when you also look at the U.S.'s side of this, President Trump ordering the airstrike and his mentality behind this, I don't think he's trying to escalate a war either. But even if he is, he's doing it with the right mindset. And I know that may not sound right at all, and it may not come across too well. But when you look at, and I've retweeted this on my Twitter account at Chad Shoop Guru, but I retweeted a video of what President Trump had said back during when Obama was president, and it was 2011, and Obama was running to get reelected in 2012, and he won the reelection, but he didn't win it the way Trump thought he would. Trump was on video saying that Obama was going to have to attack Iran to boost his reelection probabilities. He was going to start a war with Iran, and Trump mentions that it's pathetic that he was going to have to do this, but basically Trump was trying to stay ahead of what a rallying cry could be for Obama at the time. But now here we are, it's Trump, and he's in a re-election year, and all of a sudden he's attacking Iran kind of out of nowhere. He's attacking Iran and trying to start a war with them, or at least trying to shove them a little bit. And part of him doing this is because he's in this re-election mindset. He sees the benefits of this, that he can win re-election just by rallying up the Republican base and getting the voters to come out, because he's putting his foot down on Iran and he's standing up for America and for what America stands for. So by doing that, he's building his re-election campaign right now. And I know it's hard to get caught up into that, but that's really a good sign to see, because that means that he's thinking about re-election. And another thing that he wants for re-election is a bullish stock market. So I think Trump's going to help support the stock market in 2020. I don't think he's going to do anything too crazy that would see stocks pull back from here. I think he's going to let things go, like the trade wars with China and other tariffs. I think he's going to ease up on that quite a bit here in 2020, and we're going to see stocks continue to climb. But for as far as oil prices, I think just that mere idea that there's tension between the U.S. and Iran and how this is going to continue to just kind of spiral from here, it may not get out of control and it may not get much worse, but just kind of back and forth and the sanctions and the this and that, it's going to elevate oil prices from the current level. And I see oil going well above $80 a barrel just in the first few months of the year. We're going to see this strong rally, and we're going to dive back into one more chart to help explain why I expect to see that. So this chart is a seasonality chart on oil prices. Now, seasonal trends are something that I trade constantly. I have a whole service about this, and if you want to learn more about seasonal trends, I encourage you to scroll below this video and check it out, because I have to tell you that they're somewhat amazing. When I was first studying charts and stock market trends, this is one thing that I was a little unsure about, because seasonal trends just didn't seem like they would be a thing. But when you look at these seasonal trends that come up, and I study them on a sector level, and then we trade this individual stocks, that helps us outperform these sectors. But when you look at it, even on a sector level, it's amazing how many times a chart like this literally calls the tops and the bottoms of this trends for the sectors during that year. So it's really remarkable, and I can only tell you this, that if you study it, you'll see how powerful it is. But if you want to learn more about how I use these seasonal trends, then be sure to check the link below this video to learn all about it. So when you look at the seasonal trends for crude oil, you'll notice that January is kind of a volatile month. I mean, it gets a little pop at the first month and then it pulls back, but then it really takes off through February, and through March and through April, we see a nice strong rally for crude oil prices. And that's why I expect to see oil go well above $80. It's going to break above that resistance. If it doesn't do it this week, it's going to do it in a couple of weeks. So it's going to get above that resistance level, and then it's going to continue to shoot higher for the next several months. And the situation in Iran is just really going to help fuel this, but it's falling it right in line with the seasonal trends for oil prices. And I know it sounds crazy, but these things they just work. They do. And we're going to see it play out in 2020. Oil prices are going to rise through February, through March, and through April. And this is going to be the backdrop supporting that rally, is the situation with Iran and how that develops over the next few months. And what all this means for Chevron is that it's going to have this bullish sentiment in the backdrop to help push prices even higher. So to add on to this sentiment, let's take a look at what the analyst rating is for Chevron to see if they're as bullish as oil prices are going to be in the coming months. And now the S&P Capital IQ analyst rating, out of 26 analysts, have the stock rated at an outperform in 1.96. So analysts are still on board with the bullish idea for Chevron, for oil prices to help push this higher. So analysts are clearly on board with the bullish sentiment that I'm seeing in oil prices for the stock. And this translating over into a bullish reading for the stock. So let's dive into the fundamentals to see why analysts are bullish on the stock and how that translates over its quick comp. So let's start by looking at a few key stats. So this is a chart we look at every week. Now, the line in blue is going to be the total revenue, and the bars in this burgundy color are the net income. So you can see here that net income was actually negative in 2016, and that's going to show up when we look at the other fundamentals for the stock, because it's not really going to have a 3-year trend for its growth. Now, for the revenues, you can look on the left side to see how high the revenues were on these years and what the expectations are going forward. And you can see that here in 2019 onward, it's not much of an increase, just very slight, very stable revenues going forward, but not much growth. And, analysts and investment community, they love to see growth. So it's interesting to see that this stock is rated as a buy, even though we're not seeing growth in its top line, which is revenues. And then when you look at net income, this is the bottom line reading, and you can see that they had negative net income in 2016. And that changed in 2017. They had a nice rebound. And in 2018, they continued to fuel that momentum higher. But in 2019, they had a drop in net income. It's not negative, but they did have a reduction in net income. And you can look at the key on the right to keep up with where net income is. But then from 2019 on, it's just a slow escalation higher. And it's great that there's a trend higher here, but it's nothing to get excited about. Nothing that would really stand out from a fundamental perspective that would make you want to own the stock. But you have to keep in mind that this is not a growth stock. Instead, it's a blue chip company in the oil and gas sector. So again, oil prices are going to be key, and it's a blue chip stock. So there's other areas that you'll look at, like the PE ratio and dividend yield, that can make you want to buy the stock and hold it for years to come. So let's dive into those other fundamentals to see how Chevron stacks up against some of the competition in the industry. Now, they have several different stocks here that they've pulled as competitors. You have Exxon, Phillips, Marathon, BP, and several others. They're all kind of in this wide range of oil and gas stocks, but they're all across the board. Some blue chips, some smaller caps, but it gives us a wider range to look at how Chevron's performing against these other companies. So the first line we'll look at is just the market cap, and we just want to see how large of a stock Chevron is to its competitors, and you can see that it's on the high end. Now, it's not the largest market cap stock in the oil and gas sector, but it's up there, and it means it's a large, stable, blue chip stock that which investors are not looking for as a growth stock as much as just a stable source of returns and income. Now, short interest just gives us an idea of the short interest on a stock, how many people are bearish, and this is just shares sold short. So it's not a percentage of the shares, just an actual number. And we can see that that's basically in line. They're not the highest company with shares sold short, but they do have a decent amount. And that's just going to be pretty standard for these large cap companies to have a large amount of shares being sold short, as there's traders in there every day going back and forth making these trades. Now, when we look at the price to earnings ratio, the PE, this is at 17, and that's right in line with the industry as well. The average is 17.5. They're at 17.4. So they're basically middle of the road. They're not exactly overpriced, but they're also not a value play either. They're not on the low end of this. So that just tells you that investors are already kind of pricing the stock on level with the other competitors in the industry. And when we look at revenues for the 3-year average annual growth rate, it's at 12.9%. That's below the mean of 17% across this board from competitors. And then the net income, that doesn't even give us a reading because of that 1 year where it was negative. So we don't even get an idea of that. Then when you move to dividend yield, it has a great dividend yield of 3.9%. Now, the mean for these other stocks is still 5%, which is rather high. So even though Chevron's got a nice solid yield of 3.9%, it's still not enough to really get it at the top end of its competitors. But what's important to note is that with Chevron's yield, it actually did end up as one of the dogs of the Dow this year. And if you don't know what that is, I just did an article on it that you can learn all about it. Some of you may have checked that article out already. If you haven't, I have a link below this video to where you can learn more about the dogs of the Dow, how to trade it, what it means. But basically, these are the 10 stocks in the Dow Jones Industrial Average at the end of the year with the highest yields. And those 10 that outperformed the rest of the Dow Jones Industrial Average, at least the average overall, during the upcoming year. So that's 2020. Chevron's one of those stocks that's expected to outperform. So that's another bullish sentiment reading for the company. And when we look at the quick comps, the fundamental aspect of this, Chevron doesn't really stand out to me. It doesn't stand out. It doesn't have anything that really bolsters it for investors to pick this stock over some of its competition. Now, it's a blue chip. It's a stable company, but there's really nothing standing out so far that would make you want to buy it from the fundamental aspect. So let's dive into the last piece of our bank it or tank it for today, and that's the technicals. So let's look at the price chart for Chevron to figure out whether or not we're going to bank on this or to tank it. Now, when we look at Chevron, I already have a few things put up on the chart that I wanted to point out. So first thing we'll start with is the 200-day moving average in yellow. Now, I always start with the 200-day moving average because this just gives us a broad trend for the stock. If it's trending higher and prices above it, the stock is in a bullish uptrend, and if it's going lower and prices below it, then it's in a downtrend. But when you look at the 200-day moving average on Chevron, it's actually just going sideways. It's really headed nowhere, and you can see that by price jumping all around it, but really not breaking out. And that's because when we look at Chevron stock, it's also stuck in this sort of wedge pattern with the red resistance line closing in on a green support line. We saw this with oil prices, and what it means is that we can expect a breakout in the coming weeks, either to the upside or the downside. Now, when you look at wedge patterns, they're great because they're also triangle patterns, and they give you an idea of the breakout that we can expect once it occurs. So once the breakout occurs, we have expectations for how big that breakout will be. All we do is take the height of the pattern. So in this case, it goes up to about 134, but it goes all the way down to about 108. So we're talking about $25 or $26 a share, which is a really large move for this stock because it's going to be about 20-25%, depending on where the breakout occurs, whether it's above the red resistance line or below the green trend line. Now, while the technicals are not telling us too much with this wedge pattern, what they do tell us, though, is that the history of these patterns tend to be continuation patterns. And what that means is that the pattern that the price was heading in before it formed, which when we go back to about 2015, we see that prices were in a strong uptrend all the way until 2018. And then prices started to consolidate. So in this consolidation, it was coming after an uptrend. So that tells us to expect a breakout to be to the upside. So the technicals for Chevron today are actually going to be bullish, even though they're a little uncertain. They give us the clear key levels to watch, the red resistance, the green support. That's what I'm going to watch going forward. And when one breaks, we know to expect the stock to head sharply $25, $26 per share in the next month or so in that direction. So either to the upside or downside, and we'll know as soon as it breaks. But because it's typically a continuation pattern, and because of this wedge formation, we're going to go ahead and give this a bullish indicator for our bank it or tank it today. So that brings us to our checklist, where we're going to see how the fundamentals, the sentiment, and the technicals performed for Chevron. So the fundamentals, that was one of the iffy situations for Chevron. It's going to get an X today because it didn't really stand out on its fundamentals from the quick comps that we looked at. There was really nothing there to get us excited about the stock. The oil price thing going higher, that's great, but it doesn't go into the fundamental box. Instead, that's going to stay with the sentiment for Chevron, and that's going to give us a bullish indicator. So we'll give that a check mark today because the sentiment reading was very high. The analysts had it ready as a buy, so that was great to see. And then the oil price is expected to go higher, give us another positive sentiment for the stock. So we can give it a check mark for today. And then the last thing, the technicals, even though it's a little uncertain, the wedge pattern gives me an idea that I expect to see prices break out to the upside. So it's going to get a check mark today as well, landing Chevron on our bank it list for today. So it's a stock that you can expect to go higher in 2020. And I want to go back to the price chart one more time just to give you my exact price target that I expect Chevron shares to be at over the next 12 months. So I've already explained how I expect prices to move about $25 a share once we get a breakout above this resistance line. So that means that I expect prices to already shoot up to about $150 a share. And that's just based on breaking above this red resistance line. Now, when we looked at oil prices, we can see that I expect most of this move to really take place over the next few months. We're going to see this bullish sentiment reading. I think we're going to see Chevron break above this red resistance line at some point in January, some point this month, and then in February, March, and April, we're going to get the rest of the move all the way up to 150. But 150 is not my price target for the next 12 months. That's going to be 160. I expect Chevron to shoot up to about $160 a share, which is roughly a 30% price increase for Chevron in 2020 from its price today. So 160 is my price target for Chevron in 2020. It's a stock that you can bank on. I expect shares to move higher, and we're really going to see that move take place over the next few months. So it's one that you want to own today, and you have the key levels to watch. If you don't own it, you know what to do once it breaks those levels. So that's all for Chevron today in our Bank It or Tank It. But below this video, I have a lot of extra content for you. If you want to learn more about seasonal trends, there will be a link below this video just for that, just to teach you about seasonal trends and how those can really help grow your portfolio in 2020. because seasonal trends are a very strong natural phenomenon in the stock market. Sounds like it shouldn't work, but it does. It just works. So if you want to check that out and learn more, just scroll below the video and click on that link. I'll also have a link back to the Dogs of the Dow article on our website, so that way you can learn more about that. And then a link to my latest S&P 500 Bank It or Tank It YouTube video below this video. So just scroll below, check out all that additional content. Don't forget to click subscribe so that way you don't miss out on any of my weekly videos that I post. You can click the bell to get a notification. And of course, if you liked it, give me a like button so that way you let me know. And be sure to leave me comments below the video as well, because I love reading through your comments. And we're going to feature my next Bank It or Tank It on a stock that you all have commented below this video. So that's all for today. Thanks for tuning in. Now let's go make some money.